Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you need help with anything, check out finding-value.com. There's a lot of opportunities right now in the oil and natural gas space that I very much like. Um, like you guys didn't notice if you're part of the membership. So I'm going to go through here. I'll give you my financial opinions as we go through it. And just as a reminder, we've got a 7 a.m. question and answer session coming up on Saturday, just as a reminder. So let's dive in. Let's take a look and see what my opinions are on the markets today. So we got the DXY. I put that in, drew all these in yesterday. Getting a little bit more selling pressure today, but I'm not convinced that this is just going to fall down. I still think that we could potentially go higher based off of where yields are looking like. Yields are the ultimate driver of all of this in terms of the DXY and the relative strength of currencies. So, yeah, we were down today. Yeah, we saw some movements in gold and silver to the upside, which is driven by a little bit lowering of yields, a little bit lower dollar. Um, I'm not convinced that this has staying power. So, yes, we were down today, but I'm still think that this can potentially go up. We look at the yields, and the yields is where I think we could potentially go higher. Why is that? Because this setup right here, I've seen this a billion times, guys. When you look at all these charts, I've probably looked at millions of charts, millions with an M. You see these large, this point onward, this is all screaming higher. The green army, the big green candlesticks that are coming into play, the small selling pressure move, that just screams that it wants to continue higher. And that is existing across the board. The 10-year has it back to support. That's just a retest where we go higher in yields. And the 30 years got the same thing. Higher yields is generally a tailwind for energy, oil, nat gas, and those, interest rates and oil and nat gas going up move together. I don't know which one's necessarily the leader. If I were to guess, it would be oil is the actual leader, and interest rates kind of follow. And then inflation will eventually work its way through the system. I think what is impacting rates now is the CPI number that was released and people not believing that they're going to lower interest rates. But eventually, oil is going to start to rip here, and that will be inflationary. It'll work its way into the consumer price index, I think. QYX TNX ratio basically flat today, but it is inverting, which is not necessarily a good thing for gold. I mean, it was up a little bit today, but these monster selling pressure days with small movements up, that's just a flag pattern to go lower. TLT, which is bond prices, it's up against resistance. I think this is going to go lower, which with yields going higher, it's just a little flag pattern kind of. 2-year, 10-year, I think this is going to continue to invert. I know that sounds weird. It may go counter to some people in the recession camp, but that's what it looks like. Charts don't lie. So gold, it's up today, but again, the momentum's to the downside, and I would be looking for further sideways action to slightly lower. Silver is up 2.5% today. It's holding ground at its support level, but we'll see what occurs with interest rates. And again, guys, the interest rates, precious metals can break this relationship. It doesn't have to hold this relationship that we've had for the past 40 years. It can break it. We just haven't seen that yet. And here, I mean, I can even draw another line through here, basically saying that we're breaking out of this downtrend line. So maybe the relationship is breaking where we can get a break to the upside irrespective of what interest rates do. And I think that will be the case if interest rates get to a high enough level and people lose faith in the bond market and currencies. I think we will go higher. But that doesn't mean that the mining companies will necessarily rip. These physical metals will rip. But the mining companies are still subject to input costs. And if we're in a very highly inflationary environment, we're going to see cost curves really start to move to the upside. But here's silver. It's moving on up. Platinum's moving on up today, $8. And then palladium was also up $22, 2.35%. It looks like these are all trying to bottom. That's what it looks like. And then the market conditions, interest rates have been a headwind for these. So we need to see that relationship break down for me to get really highly interested in gold and silver companies and mining companies in the short term here. One good thing that did occur today, gold and silver mining companies did outperform gold itself. But again, I want to see this outperformance when interest rates are going up. If rates are going to go up, I want to see this outperform when it goes up. Right now, we are still underneath all of these resistance levels that we still need to break through. Could this be a bottom? It very well could, but I got to start to see some outperformance these gold and silver mining companies, guys. I got to see it start ripping, but for me to change my opinions on it. CRB moving on up. Oil was up today, so that's on moving on up. That looks good. We've got the CRB index slightly lower, so S&P went up a little bit more than the CRB index. We've been basically just moving sideways here. GDX up 3%, but again, the momentum's still to the downside. I got to see some more action here. Let's see some more data. GDXJ and SILJ, they're all the same thing. We popped out, and this could be a retest where we actually go lower with interest rates going up. So, I mean, get ready for that. Crude oil was up 1.3%. It's a pretty strong candlestick because we gapped down in the morning. Momentum's heading upward. If I were to look at that from a short-term perspective, we gapped down, and then the momentum's coming up. We hit our head on this resistance, and we're flagging the pattern here to break out again. So I think, I mean, if we can get a breakout here in crude oil above, I would say like 80 bucks, if we can close above 80, I mean, we're going to the promised land, boys. We are moving. It's going to be a big move to the upside. And this could be the beginning of a very big move. Maybe $250, $300 oil by 2027 is my guess, something like that. I've made those projections before, and people say, "What kind of super cycle is this? I mean, it went up and then we came back down." Yeah, that's called normal, guys. It's called wave two. Calm down. Got a long way to go up. TTF gas up 0.8%, roughly speaking. I think this will bottom out at some point. It's going to take some time. Same with natural gas, Henry Hub. It's like every day is a down day in natural gas going down here, but we're going to get cheap enough. It's going to bottom out. It's going to turn, and we will be ripping higher. Natural gas is like the basis of energy that we're using is nat gas for basically the society that we live in today. It's based off of oil, nat gas, and coal. And everything else in the world is subsidized by this, outside of maybe nuclear. So nuclear, nat gas, coal, and oil are like the big energy return on investment stuff. Renewables are all subsidized. They do not work. They will not work, in my opinion. So nat gas was the big swing producer, and right now we've had warm weather. That's what it is. It happens. So looking at XOP, yeah, you know me, up 3.5% today. We're seeing massive rotation of money into uh, XOP and the oil and gas exploration production companies. We get moving here, guys, and break this neckline. This is going to be a see ya, wouldn't want to be ya. It's going to be a big move. And again, I've got a lot of really good individual companies here, right now. They look very good for potential investments in oil and gas for individual companies. They are going to wax this ETF. So I know I'm going over this ETF, but I'll give you one. This is one of the companies I own. I'll just compare it to show you. It's SM Energy, same scale. That's the outperformance. It doesn't even look like it's in the same sector. Up 1,500%. Well, actually, it's up more than that from where I bought it, which is the bottom here. And that's what it looks like if you were to compare. I'm up 23 times my money. I bought it right at the bottom of September, October. You can look at my earlier YouTube clips because I actually showed this one, SM Energy. But we've got a bunch that are actually positioned very, very well. I know some people were like, well, natural gas is down. My SM Energy is basically at all-time highs. That's where I was getting my large returns. And there's other ones that were up over 100% last year, some of my investments. So this is looking like it is forming pretty well, and hopefully we get a big move. OIH also ripping it today, 3.15. We're up against that resistance line, the top resistance line. Hopefully we can punch through it. And this is the energy service companies. These energy service companies, they are still stupid cheap. If you look at this blue line going across, the blue line is right here. We are cheaper than the beginning of the bull market of 2001 and 2002. We are cheaper than that. And I think that the intensity of drilling is going to be far greater than this move, far greater, for a variety of reasons that I won't go into here. Profitable Uranium Trust, we are down a little bit. At least we've got some buying pressure coming off this support. At least we've got that. We're bouncing off that support level. So we'll see what we can put together tomorrow in terms of a movement. URA is also holding steady. That's good. But again, we got to see buying pressure come in. The momentum is still to the downside for all of these. Momentum's still down. We're back against support. It's got a small candlestick. The buyer's got to come in, put a big fat bullish engulfing, and then I'll tell you the day after tomorrow that this will go higher, or tomorrow after the market close. I'll say, hey, look, this looks good to go higher. So we need to put in some candlesticks to put in a reversal candlestick. It's trying to. I mean, this is what it looks like. We basically have this downtrend. Let me throw it on here so you guys can see it. So this is the downtrend that we've got. We just haven't broken that downtrend. It's trying to. It's at support. You can see the sideways support here. It's squeezing up. And what we want to do is we want to punch through that to the upside. We don't want to punch downward. So we're at support. We're coming down into the corner, and we just need to break it. That's really what we need to do. And this is, I'm just using URNJ as the example. We got to start doing some punching. TAN is up a little bit, but with increasing interest rates, I'm not convinced that this is sustainable. We've got copper that's just ripping. Copper is going to break out of this to the upside, guys. It's going to rip. We are short copper. We're running deficits. This is going to go to like $10 an ounce or a pound. $10 a pound or something like that, or $8 a pound. It could even go to $20 a pound eventually, like years away, not immediately. But this is going to go higher. Now, the question is, are the copper companies going to make the money, or are the energy companies going to be the ones that driving this all the way up? I think it's going to be energy that makes all the money. I think copper companies are going to they could get squeezed. Could. But I also think the ones with the existing infrastructure might do well, some of the big diversified mining companies. But COPX, that's up today, 1.4%. Doesn't look too bad. It's holding support down here, and it's working its way on up. Strong candlestick today. Lithium, yeah, it's up today, but again, watch interest rates. Interest rates going up. It's probably just going to be a continuation pattern to the downside. If that's a flag pattern, that flag's potentially lower. So that's what I'm worried about if interest rates were to jettison on higher. Same with REMX. Our interest rate's going to move this thing to the down. We'll have to wait and see. S&P 500, it is up today. This thing is relentless, just keeps moving up. But we did have tailwinds with a weaker dollar, weaker interest rates. Same with the U.S. composite. We are squeezing on up here, where I don't know if this thing breaks down, but it is an election year. They're probably in there buying the stinking stocks themselves. The Federal Reserve, that is, maybe, to hold this thing up. Carries moving on up, lower interest rates, lower dollar, lower interest, lower dollar. Emerging markets are going up. We've got XHB, which is also up 0.57%, still looking good. MU was moving on up, lower interest rates, lower dollar. Iron ore still working its way on up slowly, up 0.25. Aluminum down a little bit. That's right on support. We've got Baltic Dry Index moving sideways. Not much of a really to talk about there. We've got Newcastle Coal up slightly, 0.28%. I still think this is basing out, and it will probably move with natural gas whenever natural gas moves. Bitcoin is moving sideways today. Just a little candlestick there. Still looks good to go higher. And then Ethereum's also still looks good to go higher. A little bit of a wick at the top. We'll see if that actually reverses. We also have a little bit of momentum loss. The candlesticks opening and closing. So a little bit of momentum loss there, and we should be watching tomorrow to see if it actually puts in an upper wick, turns back lower. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Use the word LEAP for a discount coupon code if you want to try it out. We do have a larger discount on the yearly membership, and if you want to swap from a monthly to a yearly, go for it. No big deal. But lots of opportunities in the market right now. I like the oil and natural gas sectors. That's what I like. There's a lot of good companies doing share buybacks, huge cash flow, and if we move on up here, man, it's a really good setup. It's a really good setup. So, but that's what I've got. 7 a.m. question and answer session on Saturday. See you guys there. But that's what I've got for today. See you later. It's finding value.